Hello everybody, I'm Gerard Spur, and I'll be discussing why Gero Inc. should become an S corporation rather than a C Corp. Let's get started by defining what is a S corporation. So an S corporation is a business entity that offers significant tax advantages while still preserving our ownership flexibility. But there are some limitations to become an S corp. First, you must be a domestic business entity, where the shareholders must be a U.S. citizen or a legal resident of the United States. Secondly, an S corporation should not have more than 100 shareholders, and it is restricted to only one class of stock, or we known as common stock. Finally, an S corp should be an eligible corporation. These include certain financial institutes, insurance companies, and domestic international sales corporations. Once the requirements are met, then there are some benefits and disadvantages that need to be considered. An S corporation benefits are most likely to outweigh any disadvantages. The S corporation structure can be beneficial when it comes to transfer ownership or discontinue the business. Here are some disadvantages. An S corporation protects the personal assets of its shareholders, where the shareholders does not have personal liability for the business debts and liabilities of the company. Creditors cannot pursue the personal assets to pay business debts, whereas a sole proprietorship or general partnership would leave their personal assets vulnerable. An S corporation do not pay federal taxes at the corporate level. Thus, it is a pass-through entity, which means that the business losses can offset other income of the shareholders' tax returns to reduce income that is paid. This can be extremely helpful in the starting up a new business. Characterization of an income can help owner-operator reduce self-employment tax liability while generating business expense and wages paid deductions for the corporation. Interest is a S corporation can be freely transferred without triggering adverse tax consequences. Interest in an S corporation can be freely transferred without triggering adverse tax consequences like partnership or an LLC. An S corp does not need to make any adjustments to property basis or comply with complicated accounting rules when an ownership interest is transferred. Although operating as an S corporation may help a new business establish credibility with potential customers, employees, vendors, and partners because they see that the owners have made a formal commitment to the business. If there are benefits, there must be disadvantages of forming a company as an S corporation. To form an S corporation, you need to first incorporate the business by filing articles of incorporation with your desired state of incorporation. Obtain a registered agent for your company and pay an appropriate fee. Mistakes regarding the various election, consent, notification, stock ownership, and filing requirements can accidentally result in a termination of an S Corp status. But it is relatively rare for this to happen. You can only have one class of stock, but it can have both voting and non-voting shares. Thus, there cannot be different classes of investors who are entitled to different dividends or distribution rights. Also, number of shareholders are limited to 100 shareholders or less. Because of the one-share stock restriction, an S corporation cannot easily allocate losses or income to specific shareholders. Last but not least, most fringe benefits provided by the corporation are taxable as a compensation to employee shareholders who own more than 2% of the company. So you have to ask yourself, why should you choose to be an S-corporation? You should choose to become an S-corporation because an S-corporation is not subject to corporation income taxes, which is a flat rate of 21%. You can avoid double taxation. You can receive different treatment of tax purposes that is generally favorable to the business owner because it is pass-through entity similar to an LLC. It also gives you certain flexibility for managing the company as an owner. Stock is freely transferable, and you can sell the ownership interest without obtaining approval with other shareholders. With that being said, I would strongly recommend that Elliott Smith should create Gerald Inc. as an S-corporation rather than a C-corporation, because he can avoid double taxation, he owns all his shareholders' interests, and certainly have flexibility to manage the company.